A home in the last year knows the challenge of the housing market in West Michigan, but with rising interest rates, could there be a slowdown anytime soon?
13 on your side's Elena Holland explains what the West Michigan housing market could see this summer.
Even though interest rates are on the rise, don't expect to see house prices come down in West Michigan anytime soon. But what it may do is decrease the home size or the price that you're able to afford.
We haven't seen it impact us just yet.
Julie Reitberg is the CEO of the Greater Regional Alliance of Realtors. She says the West Michigan housing inventory is still so low, demand remains high.
And a lot of people are trying to compare this to the bubble from 08, 09, and the two worlds and the two issues are totally different. We really don't expect this to hit the housing industry.
That's because back in 2008, there was inflated pricing on too much inventory. Now that real demand is driving up home costs with little inventory to choose from.
Where we want to be is 4 to 5 months of inventory, and we're averaging 2 to 3 weeks right now.
What increased interest rates will do, however, is decrease the amount of home a buyer can afford.
It just might mean instead of that 4-bedroom, 2-bath, they're going to get a 3-bedroom, bath and a half, because it's based on affordability and what they can afford on as a monthly payment.
Also, rent may increase as landlords see growing property value. Other realtors agree not to expect a decline in home values anytime soon, but do see a reduction of competition for homes.
Those who are not able to compete on price will be forced to remain renting or remain in their existing home, again, just hindering their ability to kind of pick and choose and determine what housing choice is right for them.
According to the Grand Rapids Association of Realtors, in Kent County in 2021, there were 861 new listings in May. In May of this year, there were 901, a slight increase in homes for sale. But the average sales price has gone up nearly 18% since last year.
We still have demand. Despite the fact that rates are going up, a 5 or 6 or 7% rate is still considered a great rate on a house. We've been spoiled for too long, quite frankly.
Adding to the frustration are problems with home building. Things like the rising interest rates, lack of labor, and supply costs are making things even more frustrating. Reporting in Grand Rapids, Elena Holland, 13 on your side.
Happening tonight, the Grand Haven City